Hello and welcome to this lesson. So in this lesson, we are looking at another setup example. So in this lesson, we have, this is the pound USD, this is the 1 hour chart. So our setup example comes in here. We're going to break down that example in the 5 minutes chart so that we can see how that setup panned out. But before then, let's look at the higher time frame key level that was hit for this setup to be valid. So basically we have this week's range. So the week began here from Monday to Friday, and then this week where we are looking at our example begins from Monday to Friday again. So basically the market came down to take out these previous weekly lows. So those previous weekly lows are our higher time frame key level. So you can see the market actually took out those weekly lows. So in the weekly lows were taken out. So this is our higher time frame key level. We are calling this the previous weekly. Let's call this previous weekly lows. So these are our previous weekly lows, and that is acting as our higher time frame key level. So in the 1 hour chart, you can see how aggressive the market came down to take out those liquidities, and then we are seeing a shift here starting from these lows. You can see the low was created at 9 a.m. and we're going to see how that setup panned out. So from here, let's jump to the 15 minutes chart so that you can get a clearer breakdown of that setup. So on the 15 minutes chart, this is that low that was taken out. So this is that previous weekly lows. And if we enter into, so we are entering into this new week. So we have Monday, Tuesday. Wednesday is the day that we took out those liquidities or those lows. So you can see those lows were taken out right there. So this is at 7:30 a.m. and then we had another attempt at 9:30 a.m. which cleared out those liquidities, even including previous London session liquidity. So this low was at 1:45 a.m. just 15 minutes before London's open. It was also taken out, and then we had a low created at 7:30 a.m. which was again taken out at 9:30 a.m. So this is all during New York session. So if you turn on the kill zone indicator, you can see actually this low was created at within the New York session at 9:30 a.m. So from here you can see actually how the market came about to break structure. So we're going to look at the 5 minutes, so which is our setup execution chart, which we're going to use to execute. But now I just wanted to show you the break-in market structure, how the liquidity was taken out. So maybe if I can outline these lows again. These are just session lows now within the same session and also within the same trading day. We have those lows being cleared out, and then the market now aggressively moves away to break structure. So from here, I think we can look at the 5 minutes chart to see how the setup panned out. So let's go to the 5 minutes chart during that day. So this here is where setup is. So I think I'll disable this so that you can get a clearer picture of this setup. But you can see all of this is happening within the New York session. This is at 9:30 a.m. Entry comes in at 10:25 a.m. New York session. But let me just disable that so that you can get a clearer zoom. So you can see here that once we took out those previous weekly lows right there, we got another run deeper at 9:30 a.m. Then the break-in market structure I was talking about is right here. So the break-in market structure occurs at this is at 10:05 a.m. We are getting a clear break above or close above on the 5 minutes chart, 10:05 a.m. So once we see that the market has broken structure above after clearing all this liquidity and hitting that key level, then we can start hunting for that entry point. So the first thing that I'm seeing here, I think maybe we can outline the breaker. This is our breaker here, the last up close candle before the market finally went down to take out those final lows. So you can see here, this is our breaker, and this is the one we're going to use actually for entry. So this is our 5 minutes breaker. It's a 5 minutes breaker. And we also have this fair value gap in here. I think I can also outline that. This is a fair value gap also. This is a 5 minutes fair value gap. So let's do something a bit different. So this is a 5 minutes fair value gap, and then you have that breaker right there. So I think because we are using the breaker now for entry, and then also our targeting will come in. Okay, maybe I'll show you targeting, but let's say we took a hypothetical buy position, and now we have the breaker. We can use the upper part of the breaker, but because we have this fair value gap, I'll say that an ideal entry will be inside the, once that fair value gap is hit right there. So basically you can use the fair value gap as an entry point, because it is coupled with the breaker, and we're using the breaker for entry. And instead of using the high of the breaker, we can use the imbalance right here of the fair value gap. Then our stop loss comes in below the breaker. It's about 9.8 pips. Then our targeting now, we look at the left side of the chart. We look for liquidity, any liquidity that is available. That's our target. So we have this high right here as our first target. You can see it was taken out at 13:10 p.m. We also had this high back here, which was also near term. So maybe if we use, so let's call this liquidity target. This is our target. Okay, this is our target right there. And then we also have this highs back here, which was also a near term liquidity target. You can see that was actually reached at this is at 12:20 p.m. Then finally we have this high back here, which was the ultimate objective really that the market may have reached for. So basically this high here, when we use that high as our initial objective, you can see by 12:20 p.m. that high will have been taken. We are getting about 3.46 R. So I'll say that this initial target, this is you can take partials here. Basically, it's a good area to take partials. And then we also have this area up here. Okay, this is also another good area to take partials. You can see that's at 4.49 R. Essentially at 3 R, that's more than enough to exit your entire position. But you can take let's say majority of, let's say maybe even more than 50% off. You can take even maybe 70% off at this area here. And then the second target, maybe take 15% off. Then I'll say wait for that final take profit. It's at maybe the balance of 15%. You can wait for that final TP, but you don't really have to catch the entire move. So this is at 13:20. We're getting that final take profit being hit. So basically, if we use the final take profit as our final objective, you can see it's about 5.19 R. And essentially, we have just come off this loss, and the market hasn't really moved so far. This is about just 50 pips, and you can see how aggressive the market moves at how much your return is based on this strategy. So this is another example that you can actually study, and also go into your own charts and try to formulate even more examples. So thank you so much for watching. I'll see you in the next lesson.